Hello and welcome back to another episode of the For the Property Investor podcast. And we're here with the weekly news. And of course, the only man that brings us the news is Mr. Nick Bendel. Welcome, Nick.
Thank you very much. Great to be here.
Good to see you for another week. What's been happening in your week this past week?
Well, I've had a very productive week. I own a business called Hunter and Scribe, which is a copywriting agency that writes content for finance and property professionals throughout Australia. And one of the things we are really, really good at is LinkedIn. We are LinkedIn experts. And over the past few days, a financial advisor has asked us to write a new LinkedIn profile for him and provide him with ongoing LinkedIn content, which is very, very nice. And that's just a part of what we do for our clients.
Very good. Well done. It's yes, if you're not on LinkedIn, getting business, especially if you get business through referrals from other professionals, yeah, it's the place to be, isn't it, Nick?
Yes. If your clients or your referrers are business professionals, then it's just crazy if you're not on LinkedIn, because that's where those people are hanging out.
Well, we've had a pretty busy week as well here at Leifield the past week. Lots of things happening in property management. I was actually a guest on someone else's podcast who was they're a trainer of buyer's agents. So that was good. They've just launched their podcast. So we were there talking about how we work with buyer's agents. And I was referred a commercial buyer's agent this week.
By anyone in particular?
To talk to us. Yes, Nick, it was by you. Jeez, yes, so thank you very much, Nick. You referred a commercial buyer's agent who I'm meeting with tomorrow. And for the prospect of being able to help them with building a rent roll and property management business in that space. And commercial property management is something that we're looking to do more of. So yes, any commercial buyers agents out there, or even sales agents who don't have a property management business for themselves, happy to have a discussion and chat about it.
I meet a lot of buyers agents and sellers agents, mainly on the resi side, but some on the commercial side as well. And I tell many of them about this property management service you offer, because building a rent roll is such a valuable asset. And I know a lot of these people want to do it, but it's hard to find the time and also to learn the expertise. But if they've got someone like you that they can just outsource this to, and they know it's going to get done properly, and also they continue to own the client, which is, I think, the key thing. So they get to build this rent roll without doing any of the work. So I'm sold, and that's why when I meet these people, I always ask them if they've got a rent roll, and if not, whether they like an introduction to you, because I know you can really help them build something valuable.
Thank you, Nick, and it's very much appreciated. And you do refer a lot of buyers agents to talk to us, so it's very much appreciated. So there you go, my public acknowledgement. Thank you, Nick.
Well, I like that. I love to be praised. So this podcast is going very, very well for me. Would you like to move on to our 3 news stories?
Yes. Let's get on to the actual news of the week. And what have you got for us, Nick?
Our first story is AMP Bank surprises market with new loan offering. In an Australian first, AMP Bank has launched a 10-year interest-only home loan with no midterm reassessment for both owner-occupiers and investors, according to the advisor. Unlike typical products that require reassessment after 5 years, the AMP loan provides eligible investors and owner-occupiers with the same loan and credit assessment for the full decade in a bid to give them, quote, greater certainty and stability, and enable them to free up cash flow. The loan has a maximum LVR of 80%. However, if an owner-occupier requests a loan term over 6 years and the IO repayment portion of the borrowing exceeds 50% of total owner-occupied borrowing, the maximum LVR will be 70%. AMP said this was to, quote, Safeguard owner-occupiers during market fluctuations. This does not apply to investors. Owen, what do you think of AMP Bank's 10-year interest-only option?
Yeah, that's pretty good. It's something that has been lacking in the market for a while in terms of a long-term interest-only option, and especially when it comes to investors. And it's you always used to be the case that investors could have an effective unlimited interest-only facility. But that went out the window during the GFC effectively. And so to have a interest-only, long-term interest-only option, it's a smart offering by AMP to be able to differentiate themselves, and certainly for the borrower who is savvy when it comes to financial management, it makes a lot more sense to be able to go with that option. The only thing we need to look at is whether how they factor in servicing to be able to for the borrower to be able to borrow what they want. If they're making it difficult for the borrower to get what they want at the same time, then it could be a bit of a false economy. But for the people that it suits, it's then it's a great option.
Now, for those who don't know in the audience, you've got your property management business, Leifield, in 5 states. But before that, you were a broker. So you're an expert not just on the property side of things, but also the finance side of things, which is why I like to ask you about mortgages. Now, just following on from what you were saying, AMP CEO Alexis George said, quote, "This loan won't suit everyone, nor should it, but for the growing number of Australians entering retirement with mortgage debt, it provides a valuable option, one that reflects how real lives and real needs are changing." Is she right?
Absolutely. It's if you're in a position where you don't really need to pay off principal, if you've got a healthy loan to value ratio, and you're in a position where cash flow is important, and and you might have a good amount of equity where you're fairly comfortable, and but you need to keep your options open, which means in terms of what you're going to do in the next 2, 5, 10 years, and which means you need to keep your cash flow low. But yeah, I suspect, as I said previously, that they, especially when they say this loan won't suit everyone, they're going to be fairly picky as to who they do give it to. So yes, they don't want to get themselves into trouble as a lender, so they'll be pretty picky as to, I suspect, as to who they will give this loan to.
Now, speaking of being picky, I can understand why a 10-year interest-only loan might be suitable for an investor, but would it be suitable for an owner-occupier?
Absolutely. There's no reason why it couldn't be. If someone wants to, especially if they're proven to be a good manager of their finances, why can't they choose to have interest only instead of paying principal and interest, or being forced to pay principal and interest, especially if they're in a position where they want to limit their income and limit their expenses, and to be able to provide for their future, especially if they're nearing retirement. They might be putting more money into their super, and which means they're keeping their income low now to be able to pump more money into their super. So all of those things, and that's just a scenario that I can think of off the top of my head, but there would be many, many reasons why. It might be another reason is, they have, it might be a young family that might still have two incomes, but they've got young kids and a high mortgage, but high mortgage in terms of the value of the mortgage, but they might have a lower loan to value ratio. So, which means that they would qualify for a interest only loan like this, but they want to have that flexibility and control over their cash flow in those short time while their expenses are fairly high. So, if it's the right type of um, product that suits their needs and they qualify for it, and there's low risk to the borrower as well as to the bank, then why shouldn't people be able to have an interest only loan?
Well, I'm very interested by what AMP has done, and I'm curious to see whether other lenders are going to follow suit. Let's move on to our second story. Wages growth ticks up. Wages growth has increased in a sign that inflationary pressures remain in the economy. The average workers' wages rose by 0.9% in the March quarter, compared to 0.7% in the previous quarter, according to the Australian Bureau of Statistics. As a result, annual wages growth rose from 3.2 to 3.4%. During the same period, prices rose by 2.4%, which means the average worker increased their real income by 1%. Owen, should the RBA, which by the way is meeting tomorrow, should the RBA be concerned that wages growth has increased, or is the increase too small to matter?
No, they'd absolutely would be concerned about it and be looking at it, because when wages grow, then that can have an inflationary effect, and when wages grow, it means people can borrow more as well. So that's something that they'll be looking at to be able to maybe not make that rate cut just yet, or if they were considering that 50 basis points cut, like one particular bank was predicting, they might only go for the 25-point cut as a result. So it's definitely something that, and I mean, hey, we all like higher wages as individuals. I'd love to get a pay rise too, but if as a nation, as a population, wages do grow and do grow too much, then yes, we need to understand that has an inflationary effect.
Okay, now hold that thought, because I've done a bit of research ahead of this podcast, and when I found out
cool.
that yes, wages are rising in both nominal and real terms, but interestingly, according to the latest ABS data, productivity, as measured by GDP per hour worked, productivity fell 1.2% in the 2024 calendar year, after falling 0.4% in 2023 and falling 3.5% in 2022. So should wages be rising if productivity is falling?
Good question, Nick. And it's people have had a tough 5 years coming out of COVID. So everyone's probably tired. We didn't really get to have a rest after being locked up for those couple of years and not allowed to do anything. And then we're in a position where we've got high inflation, interest rates went through the roof. So yeah, maybe people are just tired, so productivity has dropped. I don't know the exact answer to that one, but the fact is that inflation has had a huge effect on the affordability of discretionary income in the household, and everyone would be happy about getting a little bit of a wage rise to offset that. But of course, productivity is important, and we need to make sure that we're still producing. And yes, whether that's a result of people coming back to the office or still working from home, who knows? We probably will never know.
Well, it is concerning that productivity has fallen for 3 consecutive years. Do you have any thoughts about what we can do as a nation to increase our productivity?
Well, some people would say let's work only 4 days a week, and people will be happier, and which means that while they are at work, they'll work harder and get more done. It's and some studies in around the world and different corporations have shown that that can be the case. I'm not necessarily a proponent for that, but yeah, it's yeah, I think you would have to work longer hours on those 4 days, which I think would be still a more productive um, use of people's time than spreading out over 5 days. And yes, but as a nation, to be more productive, maybe we need to give people more responsibility over how they can earn their income.
Okay, well, I'm wondering with our podcast, we could maybe be more productive if we delivered the same content but just spoke 5% faster.
Yes, that way we can get on with our workday and get more work done as well. Or maybe
Okay.
squeeze in an extra story, Nick. What do you reckon?
Oh, okay. Well, these are great productivity ideas. So we are doing our bit for the nation. Everyone else, please chip in like we are. Let's move on.
There's always one of those famous jokes of yours that you might be able to squeeze in.
So what I said a moment ago wasn't humorous?
Oh, sorry, I missed that.
Okay, I thought the bit about us speaking 5% faster would have brought the house down, but apparently not.
Oh well, I thought you were being serious, Nick.
Okay, well, I'll have to get better on my comedy. Something for me to work on. Our final story today, Owen, mortgage activity trending down. Australians signed up for 127,108 home loans in the March quarter, according to the Australian Bureau of Statistics. That was down 3.5% quarter on quarter, although up 6% year on year. Owner-occupier borrowing fell 3.4% in quarterly terms, but rose 4.4% in annual terms. Investor borrowing fell 3.7% in quarterly terms, but rose 8.8% in annual terms. So, Owen, borrowing fell in the March quarter despite the February rate cut. Are you surprised by this reduction in buyer activity?
No, not really. There's been a bit of a lull in the market in the first quarter. A lot of people, and this isn't just buyer activity. You're looking at all home loans. It looks like. So it's refinancing is a big deal, and a lot of people have refinanced. Yeah.
So sorry to interrupt. So that excludes refinancing.
Right. Okay. So it did exclude refinancing. The other thing as well to take into account is we had a federal election in April or early May, I should say. So in the lead up to that, and it was why, even though it might not have been called for most of that quarter, we all knew a federal election was coming up. So in those previous couple of months, it's the same at every election time. People go, oh, I just want to wait until after the election, see what happens. Yes, it's I don't necessarily know why. I've scratched my head my whole career in this industry why people would put off that type of decision until after an election. I think it's just the people want to know exactly what's going to be happening for the next few years. So yes, no real specific reason, but that's That's my hypothesis.
And of course, we know what happened with the election. Politicians got voted in.
Yes, that is correct. No matter who you vote for, you'll always end up with a politician.
Indeed, indeed. So borrowing went down in the March quarter. However, there was an increase in refinancing, which rose 5.1% in quarterly terms and 21% in annual terms. Do you think that increase in refinancing in the March quarter was largely driven by that February rate cut?
Well, yes. Yeah. Now that people could see that rates were coming down, they were wanting to start preparing themselves to get a better rate. Would have made it easier for them to qualify for a better rate, and maybe consolidate some debt by borrowing a little more, using that equity to be able to make their lives a little better.
And the RBA is going to announce its next cash rate decision tomorrow. There's a good chance the RBA will cut rates again. If that happens, do you expect more buyers to enter the market?
Yes, absolutely. We're at a stage where every rate cut will make a difference to every borrower, and there's a lot of incentives from the federal government that's just come into or back into power, and especially for first home buyers. Even though the first home buyer market is a very small section of the market, it can make a difference for first home buyer activity, and but every rate cut makes a difference to those looking at upgrading or downsizing as well.
Okay, just before we go, I'm going to ask for an RBA prediction. We had been doing election predictions in the past few weeks. As you know, I like to do my research for this show, Owen, and I looked yesterday and I discovered that the market was pricing in a 96% chance of a rate cut. However, because I like to live a little dangerously, I think the RBA is going to keep rates on hold tomorrow. What's your prediction?
It's Even though I agree with you that they should remain on hold, it looks like there's a good chance that we'll get a 25-point cut.
The reason I'm predicting rates on hold is not so much because I think rates should be left on hold, although I do, just from reading the RBA statements. But having said that, from reading the RBA statements, they shouldn't have cut rates in February either. So
exactly. So
if you take what they say seriously, and I do, then there should not be a rate cut tomorrow. So we'll see if the RBA takes itself as seriously as I take it.
yes, and we'll wait and see, and I'm sure we'll be talking about it this time next week.
We certainly will, and we might slip in some jokes as well.
Oh, okay. I can't wait. I know the quality of your jokes, Nick, and I'm sure they'll go down like a lead balloon.
Was that a joke?
All right, Nick. We'll see you next week with the weekly news. See ya.